What's going on, everyone? I want to talk today about living off dividends while the market is dropping or correcting. Some of it I've talked a little bit about, so I'll just touch on it, but there's some other things I want to talk about. Inverse funds, right? And the power that these can have for you during a down market cycle. This is Mike, the Tactical Stock Scalper. All right. I've been dealing with a little bit of sickness the last couple weeks, but we're coming around. So feeling better, ready to make some content. So if you ever watch my stuff, you know we are kind of in a semi-retirement mode here in our family, and we're living off dividends to pay bills, do whatever, Christmas, stuff like that. So I'm just going to touch on this briefly because I've talked about it probably ad nauseum. You must prepare ahead of time for a market drop, right? While the market's getting good, we're taking profits. We're doing all these things to bolster a cash account so we can be prepared to have a safety net when, not if, when the market drops or corrects, right? And I got plenty of videos I've talked about that over the past month or two, preparing for a market drawdown. Okay, so my positions right now, we only have 4 in our high yield account, 4 funds, and they are YMAG. That one still above my cost basis. With all the market, volatility, ups and downs or whatever, still well above my cost basis. So every week we pull 100% of those dividends, right? And that goes to bills. SVOL has been above our cost basis for quite some time. Now it is below. So this dividend that we're getting here from SVOL, we'll probably pull out like 15-20% and then put the rest back in to get our average cost lower, have more shares, so that way when the market does go back up, or SVOL anyway goes back up, we'll have a lower price point, and we can, once it gives our cost above our cost basis, we can pull 100% of the dividends. Next, SQY. This one is unique because it is only made from profit. No money out of pocket goes into my SQY position. So that gives us the ability, because it's a totally free position. We can pull 100% of the dividends, right? If the market's real bad, we can, and we don't want to pull, just pull like 10% from these other funds, right? SQY can come in and deliver some much needed relief there if we want to use it for that, because it's totally free. Okay, next, NVIDIA. NVIDIA is a position on share price. I am down the most. However, with all the dividends we've received from holding this thing for, a year now or longer, we're well up on a position and getting very close to that moment where it'll all be paid off. Anyway, I quit putting my own money into the fund quite some time ago. So for NVIDIA, when this dividend comes out next week, I think, because it's my lowest, or my down the most, where share price, we will only pull 10%. I will put 90% back into NVIDIA, of course, to get more share size, to bring the average cost down. So when it does go back up eventually, whenever that may be, it'll be above my cost basis. And at that point in time, we can pull 100% of those dividends. But right now, since it's down so much, I only want to pull like 10%. AMZ. AMZ's almost even. It's still a little bit below. There was a good 3 to 4 months in a row that was above our cost basis, where we pulled 100% of the dividends and built a nice cash position. On this one, I'll pull like 30% and leave 70% back in. Another thing we do is trading that helps pay bills and stuff like that. So that's how we're doing it during a down market cycle. Of course, the longer the market goes down, these numbers and stuff will change, right? Now, let's get into what I really wanted to talk about, was hedging and inverse funds, okay? There are so many. Now, I'm not talking about the yield max inverse funds. I've tried them. I don't like them. They just don't move enough for me to work it out. So I've tried them even during down market cycles or just for a couple, 3 days, whatever. If the market was dropping these things, I just didn't like the way they moved. So I am not talking about yield max inverse funds. I'm talking about other ones. Let's talk about SPDN. That is a 1-for-1 on the S&P or SPY, okay? So it moves down, or moves up rather, about the same percentage as something like SPY or the S&P. You're not getting a ton of movement out of it. However, it is cheap. It's like 11 bucks. And you do get a dividend quarterly from holding it. It doesn't move enough for me yet. I've been in it since November, and so I've been watching it. And yes, it moves the same percentage, but I would be more happier with a leveraged inverse fund, just for us, because I think we're not making enough when the market drops on the 1-for-1. We're not making enough when the market does drop to really, for me, make it worth holding any longer. So I'm going to wait till it gets positive again, sell it, and be done with it. But I really do like inverse funds that are leveraged. And I typically go for like a 2 times. I don't really like a 3 or 4. It's a little bit too much risk for my liking. But I do like the 2x inverse funds on the market, meaning on the Qs, on SPY, on Dow Jones, whatever, right? Something like that. And I do like the 2x inverse funds because they do provide enough movement to hold them and make it worthwhile. Look, the market has been going up for 2 years, but we do get these down days or couple days. And if you average in, right, to these inverse funds as they're declining, when they do drop, they get above your cost basis. And with SPDN, when it just barely gets above my cost basis. Had I had a 2x leverage or higher, it would have been above my cost basis by a large margin on several occasions. So I'm not recommending people use inverse funds, whatever, and leverage inverse funds. I'm just telling you what we're doing, okay? And so I'm going to move to a 2x leverage. Now, I do use a 2x leverage, SRTY, on IWM, and I've had great results with that. So that's what I'm going to be using once levels start breaking on the chart as a hedge, right, to my long positions. That way I can make money as the market's going down from leverage funds using 2x leverage. I just like it. Let me know what you think. Hope you enjoyed the content. This is Mike, Tactical Stock Scalper, out.